Welcome back. Well, a bit of a fall from the highest point of the trading session, almost 200, 250 points. Actually, perhaps it's a 3 p.m. move which is reversing right now. Kunal, what do you make of it? It looked like picture perfect as you called it, but it's getting a bit undone right now.
Yeah, it's getting a bit undone, but the larger cap names where we've seen the move, for example, the likes of IT stocks, etc., the banking names. I think the move is sustaining over there. Maybe I think this could just be an intraday dip because of the expectations tomorrow, in terms of the policy meet. But I believe that we should settle back into a uptick move. So what we've done is we've broken past about 24,500 mark, and that was a huge hurdle or a resistance for the Nifty. In over the last 4 or 5 days, there have been many attempts for the index to break past about those levels comfortably. We've managed to breach those levels intraday, but we're not close about those levels of 24,500. So today's move, even after the intraday correction for the Nifty, we should be able to close about 24,500 mark. That itself indicates that the floor for the index has moved up higher, and we could be looking at a shift of range from 24,000, 24,500. We should be looking at now 24,500 as a base and 25,000, 24,800 as a resistance on the upside.
Okay, that's that on the Nifty, getting a little choppy out there. Let's welcome on board Rajat Sharma as well. Rajat, hi, afternoon. Good to have you on the show. How is it that you're feeling about the market? Any opportunities that are propping up?
Hi, good afternoon, Raisha. Opportunities, yes, there's always opportunities. But how I'm feeling about the market since morning is because I've been in and out of office, and it's been a very crazy day. It's like the markets were flattish to negative. Then at one point there was some 300 points up, and now I believe they're like 90 points. Like they've fallen a lot. So I don't know. But anyways, that said, I don't track markets intraday. But it's an unusual day. I think traders could answer that better. How I'm feeling about the markets in general is I'm fairly positive that we're unlikely to fall. And I said this last time when markets were falling, a lot of people wrote off the market and said, this is it, go short on the market, sell your holdings. And at that time also I said that I doubt if this fall is sustainable. I think we will probably bounce back. I didn't expect it to bounce back so sharply, and the reason was that at that time also I said interest rates are at an all-time high. So whenever there is some news around expectation for cutting interest rates, or right now there's talk that tomorrow maybe interest rates will be status quo, but there could be some reduction in CRR. It's already at 4.85. So I don't know, although I don't think we need more liquidity in the system. FIIs have been consistently selling. I said last time, I don't know how much more they can sell. Eventually they have to come back. So any positive development there, them coming back into India, could take these markets higher. So I'm very positive. The only thing that's a worry for me is this quarter, which is when January you start getting the results. The results have to be good. So if the results are not very good, or even average or bad, at least the way they were last quarter, then that could be a dampener. Other than that, so I think what I'm looking out for in terms of cues is the results for this quarter. It's a festive season, and that's what I'm looking at. I'm fairly positive on the market, sticking to large caps, the names that I've already suggested on your show many times, the likes of Infosys and ITC and HUL, and those are the stocks that I'm buying more of. We've added a few smaller companies, which I cannot discuss right now.
Oh, no, we appreciate that. Not looking to get those names at the moment. But Naresh, wanted to get a better sense from you regarding a couple of stocks which have been doing quite well this week so far. Z Entertainment up 15% this week. You also have IGL, which is up almost 20%. Further upside or time to book profits?
So Z could be a surprise given the fact the stock has corrected all the way from 350 where it peaked out back in 2021 all the way down to 2020 lows. And now we are seeing a recovery. There was another corporate action. And if this continues, it could surprise on the upside. So if somebody is already bought it at current levels, one could keep a trailing stop loss. The next target would be 165, 170 possibly. IGL, again, the stock went all the way back to 2020 lows and has started bouncing back. It is now coming close to filling the gap. So it should be a time to book some profits. 380 to 400, which was the gap down, would be tough to sustain. So for now, this is a band where you want to be booking profits and waiting it out.
Okay, that's the take coming in right now on some of those buzzing names. Can't, of course, get your eyes off from some of those market-related themes. BSE, CDSL, Angel One, they're all holding up well. Zomato up 5% in trade right now. And technology is the one which is really taking leadership. TCS, Infosys, Wipro, all looking good. ICICI Bank has actually sprung up quite nicely today, about 1.5% higher, and it's even overtaken HDFC Bank in terms of a move today. Reliance a lot more tempered, it's less than 1% higher, and even L&T has fizzled off from the top of the day. Kunal, stack up HDFC Bank and ICICI Bank, and where is it that you would take fresh positions if you had to?
So I'll be more confident on HDFC Bank, of course, because that stock has been an underperformer. ICICI Bank, yes, the stock has moved back towards or closing towards the live highs. 1362, I think, or thereabouts is the previous high for ICICI Bank. It's off by a margin of 25-30 odd points from those levels. But my belief is that in this leg of up move, HDFC Bank has found its mojo back again, both in terms of volumes, in terms of momentum, in terms of the correlation, which is the bigger aspect when we look at this in terms of price performance on a relative basis. Because at a point from 2020, 21 to be precise, when the bank Nifty was sub 40,000 levels and the Nifty was sub 20,000 mark, from there on, HDFC Bank has been at a similar point, 1790 thereabouts, 1750 thereabouts for HDFC Bank. So the stock is trying to not just play a catch up, but it's also trying to play a potential cover up of a huge underperformance which has lasted for the last 3.5 odd years for HDFC Bank. So I think in that aspect, the move for HDFC Bank could be a lot more stronger this time around as compared to a relative comparison with ICICI Bank.
Okay, point taken. So that's the view coming in on some of these private sector banks. Just take a look at what's happening in the markets right now and which are those big contributors. On the upside, it's Infosys, ICICI Bank, TCS, L&T, while on the losing side, NTPC, Divi's Lab, Bajaj Auto, they are coming a bit under pressure. Taking stock of some of the other individual names at that as well. Naresh, from the pharma pack, what looks the weakest and what looks the strongest?
These names which recently topped out is Aurobindo Pharma, which looks a little weak, has corrected a lot. You have Lupin, which is trying to create a topping out formation. Sun Pharma has paused. Names like Dr. Reddy's look okay because that has not rallied much and is on the lower band. But overall, looks like a pause in a lot of pharma names, and also the fact they've already run up quite a bit. So out here, Oro Pharma is one which would be weak.
Okay, point taken. So that's the view coming in on the pharma sector. Rajat, what's your take on pharma?
I've discussed this before. My take has been Laurus Lab. That's a stock we added a few months back. I've said that on your show. It was around 460, 470 that time. And, the reason was simple. The company looked really overvalued because they did a lot of capex, about 2,600 crore of capex in the last 2 years. And what they're trying to develop is their CDMO business and their biotechnology business. So that bit of the pie is what they're trying to expand. And I think they'll see the fruits of that capex they've done in those two sectors, because those are the two sectors which, so maybe they were forward thinking to that extent. But personally, I think it could still run up around 10 to 15% from here over the next 6 to 8 months, 1 year. Obviously, it's very difficult to predict this, what happens. It's all market driven, it's how overall market performs. But what I'm trying to say is it could fall less than the market and outperform the market on the upside. So Laurus Lab would be my top pick in the pharma space.
If you like this video, then like, share and subscribe to ET Now.